talked a little bit about what are some of the pain points within financial institutions. We've been around for a couple hundred years. We have legacy infrastructure, which we're actively working to modernize. But until you get there, it's sometimes harder to deploy new solutions in legacy infrastructure. And so these lab environments allow you to abstract people and technology away from those legacy constraints so that you can address some of the speed to market needs. Well, I think we're all experiencing just incredible, the speed of change, the curve has changed dramatically. And, what's underpinning that? A lot of investment in the VC and private equity space, but also a lot of these emerging technologies, cloud, AI, ML, robotics, blockchain. I'll put blockchain in a different category. But the first ones that I mentioned, they're no longer emerging technologies. They've really reached scale, and they've increased the speed of innovation, and they've increased the speed and reduced the cost of company formation. Like today, it's 1,000 times cheaper to start a company than it was 10 years ago. You don't need to co-locate infrastructure and install your own accounting system, middle office, back office systems. You can start a company digitally. You can turn on most of the services you need through a cloud-based environment in a matter of days, not months. And so, but all I think is very good. I mean, it's good for our economy, and it's driving innovation, and I think it's a challenge that financial institutions face to keep pace and leverage these technologies and not be encumbered by legacy technology. And the other thing we started to mention there is, when you think about when these legacy platforms move to the cloud, and you can start to build API ecosystems to power new business models, basically leasing the best of the best across all of these different dimensions of business, it can really drive innovation and disruption. And the other thing we're seeing is behavioral change. I mean, in part driven by a new generation rising up that grew up with a mobile device in their hand and have come to expect things to be as smooth and simple and as intuitive as they experience in their consumer lives. So there's that generational impact that's talked about a lot, but we're just, hopefully close to the other side of this COVID pandemic, which has also accelerated behavioral change. So for those individuals that were less likely to start with mobile and digital experiences, or for businesses, for the businesses that are incumbents and have been around for 40, 50, 60 years, the pandemic really kind of drove a shift in the adoption of digital tools. And where inertia was a factor, or behavioral change was a factor in making that shift, we're on a completely different adoption curve than we saw before. Spend time evaluating fintech opportunities are those that have the biggest markets currently, and those that are the most efficient. And so, when I look at, I guess one lens that you could put on this is historically over the last, call it 6 months, where has the majority of VC and private equity funding went? And those, I think these will shift. I think these are subject to shifting quarter over quarter, but those are insurtech, payments for sure, credit, capital markets, and wealth management. And I just, on payments, so let's talk about a couple of them maybe. Insurtech makes a lot of sense to me because it's one of those, it's a huge, deep market. From consumer all the way up to large corporates. It's another industry that's been around for hundreds of years. There's lots of incumbents that leverage legacy technology. It's complicated from a regulatory perspective. So I kind of think about insurtech and healthcare and government kind of in a similar way, with a lot of those external forces. So there's a lot of big market, very inefficient, lots of opportunity. Payments, I'm very excited about because I think payments is going through a transformation that's not unlike the transformation that we've seen in messaging. When you just think about just in recent history, which I'll say a couple hundred years, we've gone from letters to telephone to long distance. I remember making telephone calls just one state away and paying a surcharge, in my lifetime, to text. I also remember paying 20 cents to send an SMS text. To now, you have tens of billions of text messages being sent daily, and they're being sent immediately, they're being sent at no cost, they're being sent globally. So imagine if all those three things applied to payments, and think about the new business models that have spun up around our ability to message for free globally, and what types of new business models could emerge in the payment space if it continued down that path of innovation that you've seen in messaging. Our earlier models, I mentioned some of this, really helped us become much more efficient from an operational perspective. So taking a lot of these high volume operational procedures and using object-based AI and ML. An example could be, we do sanction screening on millions and millions of payments. And it's basically to make sure that a payment's not going to politically exposed person or someone that's on a sanction list, if you will. A few years ago, over 95%, I think it was higher than that, 95+% of the payments that got flagged for sanction screening were false positives, because all we were looking at were things like a name and possibly an address, if an address existed. And so you can think about all the manual work for lots of payments, which inefficient for the bank, also inefficient for our clients, because we'd have to stop these payments, call the beneficiary bank or the originating bank and ask for more details on the individual. So over time, we've built better data sets and we've used AI and ML, what a false positive looks like. And so now that 95% is down to like sub 5%. So it's good for us, good for our clients. But again, that's more of an efficiency. We're using AI and ML to help us prioritize our prospects and help us to prioritize the industries that we focus on. Like, we can look across industries and see where revenue's growing exponentially. We can bring those as insights to our clients to help them think about good ratios and growth ideas, but we can use them ourselves to prospect and advise our clients. So those are a few ways we're using them here, and you can apply a lot of those to all the different fintechs that you see out there. So let's just take the payments example for a moment. We're doing a lot of work with fintech partners and ourselves to, as a client receives a bill, to lift data off of that bill around like who sent the bill, for what amount, and then taking that and helping our clients to post that to their accounting system with a lot of line item detail. And we're doing that for hundreds of thousands of like PDF documents, which each of them look very, very different. And so that's, the old technology was OCR, optical character recognition. These kind of object-based AI and ML models now are much better, 98+% at lifting that data off and helping our clients to not have to key it in and to push it then to the back office. That same technology, so that's also an efficiency, but that same technology can help us figure out if the supplier who sent that invoice would be willing to receive a payment via credit card, which is a great thing for our clients to leverage a credit card when they can. It could also, if you're paying a bill to someone outside of the US, it can let us know if that supplier would be willing to take a payment in the local currency versus a US dollar wire. So those things then have economic impacts in the form of rebate and margin on things like FX. There's actually a lot of synergies with banks and fintech. So you'd mentioned some of these where it's taken a long time for us to build like the customer distribution scale that we have today, like serving 60 million consumers. We have almost 5 million small businesses active digitally. We process over 6 trillion in notional value a day. So having this, customer distribution scale and processing distribution scale from a payments and lending perspective and balance sheet perspective are huge assets. We're also heavily regulated, and having that and knowing the writ, what's written in the spirit of the rules and regs, and using them to help protect our clients and is an asset that we bring to the table when we work with fintechs. But where fintechs are really interesting is that they're, to your point, they're starting a business from zero. They have investors that are in it for the long run. They're attracting top talent, and they're building technology from a fresh technology stack. So they don't have a lot of those constraints. But they're also usually very, very focused on like a very specific part of the value chain. If I just talk about our team strategy in the fintech space, we at any given point in time, we have, like right now, I think we have 8, 9 proof of concepts underway. When we can find a fintech company that addresses a piece of the value chain else, we're very open to partnering. And it's symbiotic in that we can fold that experience. It's typically one of a dozen steps that a clients need. We can fold that experience into our digital experience that we offer clients and give them a best-in-class experience. But also, our clients, many of them don't want to go work and contract with 20 different fintech companies to piece together all the pieces of banking that they want. And so what we can do is leverage our distribution, our processing scale, the things that we're great at. And when there's opportunities to partner and enhance the experience, we're open to doing that as well. the way that our teams work, we start with like, what's our business strategy? Like there are, as you know, tens of thousands of companies out there, and you can spend a lot of time working with them if you don't focus. Our fintech strategy is a reflection of what our business strategy is. So we start by pinning down what the business strategy is and what pieces of it would lend itself to fintech, and we make sure like our leadership team is aligned around that. And a few areas of focus for us right now are serving the unique needs of our clients today and tomorrow within specialized industries. These are like no specific order, but industries like insurance and healthcare and government and e-commerce. They all face their own very unique external forces that are going to impact what their future needs look like. So we want to be very close to what are those unique external forces, how will the clients' needs change over time, and then what fintech companies are thinking about and really like delivering on the future for these industries. So industry specialization has been a big focus for us. Thinking about, we talked a little bit about emerging technology with AI and ML coming to scale. The first wave of innovation there was a bit more about driving efficiency, and now it's a lot more about driving insights. And so we're very interested in and always looking for companies that help us throughout the life cycle, like help us find and prospect companies, help us deliver insights to those companies, help us to underwrite credit and serve up the right products to our clients, help us to nurture the relationship. So solutions that focus on data and using AI and ML to draw insights out across the full spectrum of financial services and the full spectrum of serving clients, from like prospecting to onboarding. That's a big area of interest for us. So talked a little bit about our strategy first, a few areas of focus, and then the one really effective way we found to partner with startups in the space or to, we'll do speed dating events. So we just had an innovation session where we had 30 fintech startups, like very early stage startups, join a firm-wide kind of pitch session, if you will. So we have those throughout the year, which are a great venue to get introduced to the bank. And when we find a company that's interesting, one thing we've gotten very comfortable doing are having proof of concepts. So and this is something I'd encourage, startup companies in this fintech space to think about, are working with a bank to do a small proof of concept that you time box and maybe put some criteria in there around the number of clients that you want to work with, a light marketing referral agreement so that both parties don't get weighed down with a really thick, legal terms and agreements. And you basically go to market together and like let J.P. Morgan introduce you to a handful of clients. And what we love about that, it's an easy way for us to test product market fit and to see a reaction from clients. It's a good way for us to test the startup, everything they've said and put in PowerPoint, like, are they delivering on it? Answer every question you would have, but it answers those bigger like foundational questions. And it's at very little cost to us and to the fintech to go down that path. And so I often recommend that, as opposed to it's kind of like dating before you get married, because it's doing a deep integration and long-term partnership will take a lot of work, and often a small startup's not ready for that. For any financial process we have today that's not today, a lot of our processing is not real time. A lot of it's paper-based versus electronic. So I think we'll see a shift from sub real time to real time. I think you'll see a shift from paper to electronic. I think you'll see a shift from exception-based financial, when I think about our clients and the staff that they have in their back office, they spend a lot of time doing batch-based work, managing exceptions. When those batches turn to real time and things are reconciled automatically, you're going to be spending less time on exceptions and more time thinking about the insights to drive growth in your business. So real time, more efficient, less error prone, more affordable. I think the cost of these services continue to go down, easier user experiences. So there's no shortage of capabilities out there, but we all have a long way to go to make them easier and friction free. We're spending a lot of time there. I think easy integration is another category I think a lot about. There's lots of API ecosystems out there. In financial services, there aren't really standards yet, right? I mean, there are in other industries that have been using APIs longer. And so our APIs look a little different than other banks, look a little different than clearinghouses, if you will. And I think the whole ecosystem has a ways to go to make those APIs easier to adopt and to have them cover a broader set of financial services. So today, and for most types of APIs, it still requires an onboarding process, some testing. It's a lot easier than it used to be. But I can imagine a place in a not too distant future where most financial services that you can access digitally, you can digitally through like a web-based user experience, you'll be able to access through APIs, and a brand new startup company could leverage them through direct integration or a variety of marketplaces like very, very quickly.